go through and read some of the reasons of why people are investing. What are they saying they're excited about? And then doubling down on some of those good reasons.
Hello, everyone. Welcome to another episode of Test, Optimize, and Scale. As you know, I am a regulated investment crowdfunding enthusiast and have one of the top names in the space, someone who understands the data inside and out, in my opinion, and many others in the industry at that. Brian Belley, VP of Product, KingsCrowd, long history in the equity crowdfunding world, investment crowdfunding world, I should say. Here at DNA, working on marketing investor acquisition campaigns, we research the reports that Brian puts together every Monday morning. It's a Saturday report. We want to have a pulse on what's occurring in the space, and it shows the measurements very clearly. Brian is a member of the Crowdfund Professional Association board. Excited to say he's moving into the VP position in 2025 here. And Brian, it's an episode that we've put on our wish list for a while. Excited to have you here on the podcast.
Thank you, Jason. Happy to be here. And kudos to you and just the whole DNA team. We're very impressed always with all the campaigns that you guys support and all of your knowledge in the space. So if there's anyone else out there who understands the data at the level that we do, I know you're looking at it weekly as well alongside us.
Thanks. I appreciate that. Means a lot coming from you. And I feel there's misconceptions in terms of Reg CF, Regulation A+, allowing for retail credit investors to participate in purchasing stock in private companies, up to 5 million on CF, 75 million on Regulation A+. And you really only hear about the success stories. So I think there's more learnings in the groups that are average, median in terms of how much they raise, especially the ones that underproduce. So that's why, as marketers, we try to take note. But I want to familiarize the audience with your story before we get too deep into industry discussions. Where did it all start for you? How did you become a product expert, engineer? What brought you into this world of regulated investment crowdfunding?
Yeah, it's a great question. And I won't spend too much time, but honestly, it goes back pretty far. So I can remember I was probably 10 years old or not even. And for Christmas each year, we're coming up on the holiday season and everyone would ask, what do you want for Christmas? And people are like, I want skateboards. I want, music, CDs at the time, that sort of thing. I would always ask for government savings bonds, which my parents found hilarious, but for some reason, I don't know what it was. The concept of investing in something and then that thing compounding over time always fascinated me. So fast forward a little bit, a couple decades perhaps, but I did go to school to be an aerospace engineer. Absolutely loved my job. The technical aspect of it, working on just like really, really interesting technical challenges and with really, really smart and amazing people. But it was around the 2018 timeframe when I loved my job, but nights and weekends was always doing this thing of investing on the side. So I was one of those weirdos, even going back to like 2013, 2014, I was mining Bitcoin when that was still a thing that you could do on your computer. And I remember I would be watching grad school lectures and you could mine very substantial amounts of Bitcoin at the time, which was worth pennies, right? Back then. But so I've always had like that alternative investment side too, of like trying out just the newest technology or thing. So back to 2018, I realized that there was this unique opportunity when I learned about this thing called equity crowdfunding, regulated investment crowdfunding at the time. And I saw there was just a huge gap because I was one of these nerds, these people who would love to read all the angel investing books, venture capital books, follow the blogs. But I knew that the average person out there probably didn't have the time or the resources to do that. And yet there was this new amazing opportunity where anyone, right, could invest in these private companies. So I actually decided to leave my full-time job, after being aerospace engineer for 10, 11 plus years, and jumped into this awesome world of entrepreneurship and regulated investment crowdfunding. So I started a company called Crowdwise, which was focused on sharing some of my lessons. So as I'm consuming all of this content, I would take away some of my key lessons and learnings as an investor and then share them with other people. And so I created some courses, I created some investing tools, and a lot of times you hear that, one of the best ways to learn yourself is to teach it, right? Teach it to other people because if you can kind of reframe something in your own words, it really shows you have a good understanding of it. So that's how I got into the space. I started investing in companies, very small check sizes, right? Had never done this before. I had no kind of finance background, but it shows you that anyone can come in, kind of be self-taught and learn to the point where I now have a portfolio of 230 plus private companies that I've invested in over the past 7 or 8 years. And it's just been an amazing journey. So Crowdwise ended up joining forces and being acquired by KingsCrowd, and that's where I'm at today. So I'm basically doing the same thing I was doing back then, just building awesome investing tools, providing content, looking at the data and the analytics to be able to help investors make more informed investment decisions. And at the same time, we are also helping founders and industry stakeholders, like yourself, all the marketing agencies, the founders, the issuers. How do they get the data they need to be able to make more data-driven decisions to be able to give them the best chance of success?
What data is the most meaningful to you based on that? Asking as an investor, asking on behalf of my audience, what metrics stand out the most to you?
Yeah, so to me as an investor is going to be a little bit different than to what some of those metrics would be as a founder, right?
Okay.
So as an investor, some of the things that I'm typically looking for, is it comes down, you will hear this from a lot of different investors, right? It often comes down to the team. And so how is the team, this is something that's maybe harder to measure, but how is the team the right team to be able to solve this unique particular challenge?
Sure.
And some of the ways of the metrics and the data, to get back to your question of like, how do you suss that out as an investor? That can be something hard, right? It's very subjective. But founders have to sell, and they're selling not only their product, but they're selling their company. And are they selling it to investors? And you can learn a lot when you start taking a look at campaigns kind of in aggregate and starting to see some of those trends of, the founders who really get it, who have kind of planned out their campaign, perhaps from start to end of, we're going to make this strategic announcement of this upcoming partnership a couple weeks in because that keeps giving us momentum. And when you're looking at things like the amount of funds that are raised, you can actually, I think, kind of learn a lot about a campaign, seeing what's resonating with investors, what's interesting. And so I would say, yeah, the amount raised is definitely one of the things I'm looking at, which I know is something that a lot of people will write off, but it's something that's hard. Again, right? As an investor, you're thinking you want to be contrarian sometimes in your investments, right? You can't just follow the crowd. But at the same time, I've had several campaigns that you see and they sell out, in a matter of hours. It's like, okay, what is there here that I'm not seeing if I'm not understanding that?
Had to ask. It was a burning question as you were sharing your background, and it's gonna stick with me. By the way, I like that. I was actually asking for skateboards and computers and things like that at 10, but
Yep.
you were asking for the government savings bonds. Love it. Grandfather would get us bonds. I think things like that. So it's been
That's where it
part of the
started. Yeah. It
discussion.
was a
Yeah.
gift from my great grandfather, whom I never met. And I remember I had
Okay.
a $1,000 savings bond as a kid. And I was like, oh my God, he only paid $500 for this, right? Or whatever it was. The face value is double the amount that you spent. So that was kind of what got the gears turning there.
And I love how you were able to continue that curiosity, that passion, after hours while working, as an engineer in an aerospace. I mean, exciting industry, vertical, but still made time to, look at alternative investments, mine Bitcoin. I feel like I could ask you questions for the next hour
That's a
about
whole
that
separate,
with my
conversation.
experience in Web3. But it shows a lot. It almost creates that profile of what so many assume to be the retail investor. I know this was, the Robinhood investor discussions of 2020, and we're seeing that unfold in very positive ways for people who got involved in some of those stocks, some of those alternative investments back then, and your research, angel investing books, and how that led you here. I completely agree with what you're saying as well too. Of the best way to learn is to teach. I actually have that effect present when I'm going through the stats with my team and teaching them the numbers, but really it's helping me absorb it. And I'll mention it on calls, early week, midweek. We'll include the page that I build, and that'll show up in weekly reports to give some perspective on what's occurring in the industry.
Mhm.
And amazed that you hold stock in over 230 companies. That's going to be fun to track. I may ask you questions around that years down the line here. And I know you guys, are very clear about how things are evolving. You have your exits and failures in its own chart on KingsCrowd. As you were talking about what stands out to you for the deal team, and that is the first thing that many VCs point out to me, as well as people who are highly active in the investment crowdfunding space, learning a bit about the founder. And I know founders that want to be behind the scenes more. It's like you said, they're selling the stock. They have to tell the story of the company, and in a way that I define as a marketer, resonates so strong that the prospective investor not only understands it, he or she is able to then teach. He or she is able to share with their brother, their partner, their coworker, their golf buddy, why they invested in this organization. And if they're not able to do that, if they're not able to articulate it, I think it affects their decision process, and they're not going to move forward. I also want to talk about the amount raised. It's a discussion that I'm part of regularly, because I think many issuers, groups that are going to be using regulated investment crowdfunding, look at those total amounts, maybe are considering cost of capital in terms of marketing, in terms of doing what's needed to hit the full goal, but they don't realize that average investments, average amounts raised are around 360K, median around 100, 110K. When I look at the numbers you put together for 2023, 1,434 issuers, 7.46% raised $1 million or more. I think, aside from the mom and pops, and I'm using that as a term, that are out to raise 100K, 300K, many issuers are set on that 1.235 million number before they need audited financials to go up to the 5 million. And it's few that are actually getting past those hurdles, which makes it difficult as a founder to look at this vehicle, look at this exemption and say, hey, this is going to work for me, if you're actually familiar with the numbers. What's your take on how much raised? Because I do think it's one of the most important, if not important, metrics that retail investors are looking at. Not getting yet to how issuers could raise more, but what are some misconceptions you hear in this space about how much issuers actually raise on a Reg
Yeah.
CF?
Well, I think you touched on a few really key things I want to, we can hone in
Please.
on and talk about. So, expectations, right? I think when people hear you can raise up to 5 million under, equity crowdfunding, regulation crowdfunding, they anchor to that, and it's like, okay, oh yeah, I can launch this page, and then the money starts flowing in, right? And you of all people know that that's not how it works, right? A lot of it
Correct.
is the preparation that you do in advance, and a lot of the ways that you kind of approach it. And so a better way to start, instead of saying, oh, $5 million, let's shoot for that and see what we can go, is think about your overall funding strategy and like, how much capital do you need to get to that next stage? Because maybe it's a couple hundred K, right? Maybe it's you need to make one key hire to get you to the next milestone. And another thing too is I think a lot of people sometimes think of equity crowdfunding as this is the anti VC, right? We're doing this because we're giving the finger to VC. We don't want to
Hmm.
raise VC. No, like this can be used as a complement. And we see a lot of people do that really well, where it's another tool in the toolbox. So just as bank financing and debt, and VC and angel and friends and family money, all of these things are different tools to be used alongside investment crowdfunding. So then the question becomes, not just like how do we only look at equity crowdfunding or regulated investment crowdfunding and get the most out of that, but where does this fit within our overall capital, strategy and raising plan? And maybe it's a co-investment round, like, or a community round, right? As WeFunder has branded it,
Yeah.
where you're bringing in your investors, and that's your way to allow your customers to invest in you, right? Is through that, as well as getting some venture capital. Perhaps it's just to do an MVP, right? Raise 100K if that's the median amount, your expectation. Raise 100, 200K, get that MVP out. Then you have the traction you need, perhaps, to go to a venture capitalist where you wouldn't have had that opportunity before, because maybe there was this valley of death where you couldn't get the funding that you needed to get to that next traction point. So it's giving more entrepreneurs, more founders, or as we call them, issuers, the opportunities, I think, to give them more flexibility in how they get from point A to point B, or milestone A to milestone B, before then going on. But that is, I was watching one of the congressional hearings last week or 2 weeks ago, and I believe it was the CEO of AngelList was one of the witnesses they had there, and he was commenting on equity crowdfunding and regulated investment crowdfunding. I give him good credit. He did pretty well, but he kind of said that it was two different types of issuers primarily that use it, right? One of them is issuers who want to bring their community in as investors. So you already have a really engaged community. You want to make them even more passionate, right? Think of, these people might be making $100, $200 investments, but I can tell you from experience, some of these $100 investors will offer and do more for you, perhaps give you more product feedback, like do more work for you than a $10,000 or $20,000 angel investor would. So just being able to get the brand ambassadors from that is a huge, huge leverage point. And then the other thing are the people who perhaps traditionally couldn't get that type of early stage fundraising. Maybe it's because they don't have the network, they're not in the geographies, or they're not on the coasts where they have the networks where they can raise that. Maybe they don't come from having friends and family of means that would be able to give them that capital. This is another way for them to do that. And it doesn't have to be the company that's striving to be the next unicorn, to IPO someday. Perhaps it is that, as you said, mom and pop shop who wants to turn their patrons into mug club members and they get benefits. Like, there is more than just the capital value that a lot of these people get out of that investment. And so I think, as a founder running this, that's kind of one of my pieces of advice is, you got to know your customer, know your investor customer. Who is it that you are looking to bring in this round? And like, why is that person investing? Because that becomes really, really key.
I couldn't agree more. And I've seen it happen time and time again. We've worked on over 500 deals. I've seen M&A activity come out of investors, some of them that participated at small amounts, press, franchise opportunities, ambassadors, and not using the term lightly, people who are sharing everything the company is doing. I've seen ambassadors, less vocal investors as well, bring in other investors, bring in customers, clients, what have you, various types of strategic partnerships for both B2C and B2B oriented issuers. So as a marketer, I look at this as a marketing tool as a whole. I mean, you're getting high volumes of impressions, traffic on top of the investors. Some of the issuers have over 40,000 investors at this point, people who've actually purchased stock. I could tell you that groups we've worked with that have now gone public, we're bringing up shareholder counts and how that fit into their initiatives, what they needed to do, and in some cases, how that supported trading volume once they actually went to live markets. But not all companies need to go public. I like how you said it's all about how you use it. This could be in conjunction with VCs. This can be in conjunction with debt deals you're doing, other things that you're working on. It does not need to be a $5 million round every time. It could be very effective, raising a couple $100,000, even $100,000 for that matter, and could be a market test. You're getting real-time data back in the analytics on any of these initiatives.
Absolutely. It's right. It's another thing to just keep in mind. It's not just the capital you're getting all that other value. And I can use, a case in point for our own company, KingsCrowd. we've done several rounds online across, a bunch of the different platforms that are out there. And by allowing our customers who are already customers to become investors in us, we have seen just the increased engagement. Like those are the people who are telling all their friends, who are using the product, who are giving you feedback on the product. So you get all of this benefit. And there was a study, I'm not going to remember the exact specifics. I think it was if Bain had maybe done it or working with Dealmaker, but they showed that like the increase in the LTV of customers who become your
Mm,
investors is boosted by X percent. And I forget the exact number, 50%, but you get to take that calculus into effect and into account as well when you're planning this out, right? It's not just, okay, we raised 200K in capital, but we brought on, you had the awareness of this many thousands of people. You converted this many people into customers. Like there's all these other benefits that come into it that you don't get with a traditional fundraising round. So that's where it becomes, really exciting, I think, just as a new tool for capital raising.
absolutely. We work with groups that are in planning. Some of them don't even make it to a live raise. Regulation A plus filing delays. We work with groups that are plateaued. We work with groups that are scaling. I can tell you the pros and cons of uh, the agency client relationship and success with rates with each of these. Uh, the plateaued can be the most fulfilling when they work, and we've worked with groups in healthcare, biotech, medtech, where they're saving lives, and we're going to have to go under if they didn't raise capital. They're about to quit equity crowdfunding. They're introduced to us. We saw success. We scaled it. They hit the full goal. It was very rewarding to be a part of, and these groups that are plateaued in some cases, they've shared, hey, we're not getting the best returns uh, on the raise itself, but we noticed we're getting far more sales. We brought in these large B2B clients. We've built out funnels that start with the investor campaign and move to customers, and customers, clients into investors. So as you said, that there's far more value than just the capital being raised, especially on a successful round. Another thing that founders mentioned to me is around valuations
Mm.
and how they may differ from a Reg CF to a Reg D, going after accredited investors. You guys do a lot of research on valuations, and again, it's an area founders have said they've been able to solidify more favorable valuations. There's a lot of strategy around that. You don't want to go too high; that could shoot you in the foot for later growth. But what are you seeing in terms of valuations in the industry? Any meaningful notes around that that have stood out recently?
Yeah, valuations is a divisive topic, right? In some ways,
Sure.
because it's I think in the early days, to your point of something you said, regulated investment crowdfunding had a bit of this stigma to it where a lot of traditional VCs and traditional angel investors, especially who invested in Reg D deals, saw it as a place where only second rate companies would go, right? They couldn't raise from traditional angel, traditional VCs. So they went there because retail investors, right, sometimes referred to as dumb money, which we will show and hopefully prove is not the case, uh,
Agreed.
were the only ones who would invest. However, that has shifted so much in the recent
Yes.
years through a bunch of the different data and trends that we're seeing. So, looking at the valuation data, the average valuation, as well as the median, has actually been continuing to increase in the investment crowdfunding industry, even since kind of 2021, 2022, which were kind of heights in the public markets at the time, right? There was a lot of kind of outrageous valuations in the public markets, and we refer to that as kind of, public market comps, which tend to can drive private market valuations because when you're assessing whether to make a private market investment opportunity, you'll be thinking, okay, for this type of company with this revenue, what would be potential exit scenarios, right? And you're trying to project into the future what your ROI, your investment might look like. Now, it might sound counterintuitive then. So we saw valuations from say 2022 to 2023 and 23 into 24 going down in the public markets for a while, but we saw them continue to go up in the regulated investment crowdfunding markets. And some people would come to the conclusion, oh, they're overpriced, right? Well, not so fast, because actually what we've been seeing, there's some other changes that happen in that time frame, such as increasing the maximum amount you could raise over 12 months from the 1.07 million to the 5. And what we're seeing now are actually more mature issuers entering the market. But that comes with oftentimes more traction, whether that's higher revenues. And so you got to look at the whole picture. You can't just look at valuations of the equity crowdfunding market.
Sure.
Now, another thing I would throw out as just an example of what we see. Yes, we see overpriced rounds where we look at the valuations for some of these companies and we're like, that is outrageous, that is high, whether you're looking at it on a revenue multiple basis or just compared to comps. However, it goes the other way as well. We have seen some companies that have very, from our opinion, very, very, very underpriced and undervalued valuations. And we'll sometimes ask them, we'll be like, why are you setting your valuation so low? And they're like, oh, we just didn't know. We just, coming out. So that's where it becomes, I think, really important as a founder, someone who's going to run with these campaigns, have an idea of where you're at, because you don't want to be in either extreme. If you're overvalued, you're probably going to have a very hard time filling that round or raising the amount of capital you raise. If you're very undervalued, maybe you'll get a whole bunch of investors, but you've now just diluted yourself probably a lot more than you had to. So how do you find that happy medium, that good valuation? And that's where, for example, with a lot of our data, you can run analysis based on your industry, based on your revenues, based on your team size, however you want to run it, and get different market comps to at least say, like, am I in the ballpark? Now, of course, it also helps if you're looking for outside, right, and looking at perhaps some private market comps for Reg D deals. Perhaps you even have, if you're someone who has negotiated in the past with a lead investor, right, having someone who's putting in a very large check who is going to have some negotiations with you, where it's then not just the founder coming forward and saying, this is what we're worth, but you've had a little bit more back and forth. So even if you don't come in to some of the investment crowdfunding rounds with a quote unquote lead investor, those discussions can be really valuable because it will give you perspective from outside of yourself. And yes, every founder is building the next greatest thing and they're, the best company in the world, which a lot of them truly believe. But you need to get that independent assessment. And I think talking and having some of those conversations can just be really informative to help you be more grounded in reality. Then when investors start asking you, and they will on your raise page and your Q&A, how'd you come up with this valuation? It's not just, oh, I pulled it out of thin air and this is what we came up with. You can come up with something that's, we had discussions or we got feedback from the market or we're comparing ourselves based on revenues and growth rate. Those are the types of things investors want to hear. So could talk a long time about valuation, but it's the short and sweet of it, I would say, is that.
And you guys provide a plethora of resources around valuation. I'm always going into the advanced search, looking at live campaigns, looking at campaigns to date using, Reg CF, Regulation A+, vertical specific. You could see the valuations. You guys have your rating system, notes on why those marks have been created. Look at how you guys have articles around early stage as well as growth stage companies and average valuations and how they've grown over time. As you said, pulling from public markets as well too. So being able to arm yourself with those numbers, with the statistics, being able to put in your offering page, perhaps compliantly, make sure that all goes through legal, but the numbers are out there. So not just for investors and determining what to invest in these public-private markets, but for issuers to be able to get the data to shape their round. You guys are serving as a very strong tool.
Thank you. And if it's okay, a little shameless self-plug again for another, it's completely free resource, but we actually developed a startup valuation tool where you can go and fill out a quick questionnaire of 10 or 15 questions. How big is your company? What industry are you in? What type of product? Are you software, hardware, consumer packaged goods, revenues, all that? Put it in. And what it does is it doesn't try and be forward looking or projecting, but it will go out to the universe of all 9,000 plus companies that we've tracked with all their financial data and 300 plus data points. And it finds 50 to 70, it depends on kind of the inputs, lookalikes. And then it will give you the statistics. Companies like you tended to raise 100K to 200K, or this was the valuation range. This is the revenue multiples. Even like some of the top platforms, I think that can be an important discussion early on, is making sure the platform that you go on, there's a lot of things that go into that decision. Do you like working with a team? What are the fees? What are they, they all have different models, but you got to make sure your investor audience you're looking to reach is going to be on the platform that you're raising on. And so you can start to see what companies in the past, at least, where they've found success or where they've struggled. And again, it's not meant to say this is the number that you're going to do your offering, but it gives you more input to be able to make a more informed decision.
I'm going to start pointing more founders to that tool, but both groups that we speak to and don't have the opportunity to collaborate with, and those in our client list. What other trends are you seeing in the market these days?
Yeah.
End of 2024, beginning of 2025. What else is getting your attention?
Yeah. So at a macro level, looking at the regulated investment crowdfunding markets, again, late 2021 through probably like February of March 2022, that was kind of the market peak, which coincided pretty much with the public markets at the time, where highest amounts of capital being invested under regulated investment crowdfunding, most number of campaigns. Now there was a little bit of a pullback when the Fed starts raising interest rates. People kind of pull back on their risk appetite, and so people, both in public stocks as well as in their private investments, were pulling back a little. What I can tell you is honestly, in the last 6 to 9 months, we've seen the inflection now. So we have just last month in November, you probably saw this in the KingsCrowd markets charts, but the number of active raises just broke an all-time high for equity offerings. So that means that we actually surpassed the number of rounds that you can invest in now for equity safes convertible notes is higher than that previous all-time high set all the way back in early 2022. So that's a 2.5 year plus high. In addition, we're starting to see the number of investors and the amounts invested also coming back. So we kind of think of it when we talk about it at KingsCrowd sometimes as the supply side of the market, right? It's the companies, the founders, the issuers who are issuing stock, and then the demand side. So it's the investors who are investing. So we've seen the rebound in the supply side, and we're starting to see that demand side also coming back. So while we haven't yet got back to the investment levels that we saw in late 21 and 2022, we're seeing a turnaround for sure in terms of the trends. Now, another trend I mentioned is because the amount you can raise under Reg CF is now higher, up to 5 million, and companies can raise up to 75 million under Reg A. Obviously, it costs a lot more to get started, but we are seeing more mature issuers, as I mentioned. So companies now that perhaps before would have looked at it and said, a million cost of capital, like the amount of time it's going to take me, I don't know if it's worth it. Now they say 5 million. That can get us to the next milestone. That's significant. And so I think it's actually attracting a lot more issuers that previously may have not considered it. In addition, going back to what I was saying before, where previously, VCs and perhaps traditional angels might have said, I'm kind of avoiding this for now to like see how it plays out, still in the early days. Some of the top tier VCs are recommending their companies that are good fits for this to do community rounds, right? Because they see the value, not just in the capital. In fact, it's primarily probably not for the capital, but for that brand exposure, for engaging your existing customers and letting them become investors. And so we're seeing kind of the perfect storm of all these different forces, and people are coming back into the markets, right? People are getting back into investing and putting on more risk again. And so we're definitely seeing a turnaround in the markets. So we're very excited. We're very bullish about where we're going to be. The amount of capital that was raised under Reg CF kind of peaked in that late 2021. It's been kind of flat, honestly, the last 2 years from 22 to 23, where it was around $420 million raised in total. But it was a much smaller pullback than VC, than traditional angel saw.
Yes.
And I would say, if I were to make a projection going into 2025, I think we're going to definitely outdo, I would say, the last 2 years, and it'll be interesting to see if we can get back above and get back to all-time highs again. So we're very excited just because of what that's enabling, right? These are all the founders. It's the job creation that comes along with that, the innovation that would not have happened otherwise that is being made possible. So it's all of this effort that is just very exciting for us to be a part of.
100%. How many issuers do you think there'll be in 2025?
Well, so right now, I want to say there was like 560-ish active right now. Now the average campaign, tends to be open around 3 months to 120 days. So let's call it 3 to 4 months. So we tend to see 1,500 to 2,000 Reg CF raises per year. I could see that being 2000 and upwards of 2000, given that we reached and surpassed kind of that previous all-time high as more awareness is building around it, as founders want more options to raise capital that isn't through some of the traditional means. I think it's becoming more accepted as well in all the ecosystems and more encouraged even by some of the people who previously may have been opposing it. So I would say, yeah, upwards of 2000. Maybe we break 2500 next year. Will be interesting to see.
Yeah, 1,434, I know is what 2023 you guys put in the report, if I'm not mistaken, of course. And you are the one person I would ask that question, and that helps, shape my strategy transparently beyond just wherewithal and how I speak with founders about this. And want to point out, there's just so much opportunity. I mean, 2,000, 2,500 issuers. There's something like 24 million small businesses, if the numbers I'm quoting are accurate in the US. So it's still a very, very small adoption rate. And, as you mentioned, there are more benefits than just the capital. The demand side is increasing, but far more, room to go. That being said, success rates. We talked about how basically the top 10% are moving, the bottom 50%. I could use the word stagnant. You also mentioned some of them are smaller deals in general. So that's not entirely true. But with the bottom 50%, top 10%, it's clear you need to really position yourself to be a top 10% issuer, if you will, and get that crowd effect, which is what we see in public markets. It's not
Mhm.
just crowdfunding. I mean, it's social dynamics at play here. And I really believe in regulated investment crowdfunding. Could have started off the podcast episode talking about this. If I look at the success rates in startups, they're not great, especially over 5 years. The survival rate, these numbers are actually more favorable. If I look at the success of getting funded, I'll call it offline, VC level, it's a much smaller percentage than what people think. And again, these numbers are more favorable. You talked about how that even took a larger dip and we were kind of flatline. Flatline is not the right word, steady over the past few years. I guess my question would be, why are the top issuers in the positions they are today? What does it take to be in that top 10 percentile? What are you seeing as you're researching the groups that are seeing the most success, raising the
Yeah.
most?
Yeah, well, happy to talk about some trends, but as you were saying that, there was two words that came to mind that is
Please.
everywhere in world, and it's power law. Like everything, this is something that a lot of investors in startups are very familiar with, but many things in this world follow power law distributions. And that is, kind of Pareto principle, similar thing, 80-20, 90-10, where 10% of, if you're thinking if it's book authors, if it's the successful issuers, right? That small percent usually accounts for a much more larger than expected kind of distribution or allocation over the whole. So, what are some of those people doing that is different? I think when I look personally, right, at campaigns, there is a bit of that snowball effect where if you can get off with good momentum at the beginning, it can definitely help kind of carry you through. So we actually did a study where we looked at all of the funding data from all of the campaigns, and we showed that really for many campaigns, but especially for those that raise less than say $250,000 or $100,000, excuse me, the first 14 days are critical because what you're doing at that time, you're bringing in your friends, your family, obviously, but the strangers who are going to be finding your campaign page the first time, the first number that they see there, if that's a zero versus if that's a 1 million, that's a very big social proof indication to that investor. Now, the reasons why you may have gotten that's something they need to assess. Did you just spend $1 million to get $1 million in commitments? Hopefully not, but it shows you again that founder can sell in a good way, right? So again, I said you're selling your securities, your company. You have to sell your customers. You have to sell your employees, and so if you can get that good traction at the beginning, it can help to kind of propel more and more people where it becomes kind of a self-reinforcing, flywheel where you will attract more investors because of the popularity. And that
Yes.
being said, that's not everyone, right? So, what could people do that's within their control as well? If maybe you don't have that big engaged community or that network or that strategy to be able to do that, we see a lot of different things working out well with partnering with, I will say, like different people in the industry to increase awareness. I guess I'll call it maybe like guerrilla marketing or more hand-to-hand combat. It doesn't sound scalable at all. Scalable, right? It sounds like I'm going to go in real life and I got to meet like 5 investors at this event and 10 investors at this event. But you know what? I'll tell you something. When you meet someone in real life, it's very different. It is completely different. I can say this from my investor perspective, right? When I meet a founder in person at an event, which I've been fortunate enough to do a couple times, you get to know them as a human being. And I think what you realize is on both sides of the equation, right? These aren't just numbers, these aren't just people writing checks. Each one of these people who's investing in you is an individual with their own story. And that's where I think it goes back to really knowing who your intended audience is that you're looking to try to reach. Because if you blast with a giant megaphone and say, "Hey, come invest in us and our revenue is this," like that's great and you'll probably attract some investments, but if you have a very focused strategy that is intended to speak to your intended audience specifically, I got to imagine that's going to be much more effective. And you probably have the data more to, talk to some of that of whether that is successful or not. But I would say that it's, some of these popular issuers, yes, some of them have huge engaged communities. We've seen a lot that don't. We've seen some people that have done very little paid marketing and been hugely successful.
Yeah.
And, what did they do? A lot of times you talk to the founder and it's like, I was on the phone all day, every day, calling up investors. I was trying to find people online and in the Reddits or the LinkedIn's or wherever it is that your audience is, that's where you want to be. And especially the founder, it's so important that the founder is very engaged in that process because as an investor, if you see the founder is interacting with you, it feels completely different than, if you have a paid contractor or someone who's answering questions on your campaign page. Not the same. I think founders, you need to take it seriously, right? You got to be in there yourself. Yes, it's going to be a lot of effort, but I think you will hopefully reap the rewards of that effort.
Most proactive founders have the most successful campaigns, and you could probably name, first name the founders of the top Regulation A plus rounds, top Reg CF campaigns that are live today. I know I can for our client list and other campaigns I watch closely. And, I asked the question because I want to encourage more founders to play into that role, as well as to use Reg CF, use Regulation A plus as a whole. I talk about these stats. I don't want them to be discouraging. I want to be able to point out, hey, this is why the top groups are in those places, and this is how you can do it yourself. And that first day, that first 14 days, so glad you mentioned that, because I hear more times than not, we're going to go live, we're going to see what our audience does, maybe we'll do some marketing from there. And I just don't look at that as a best practice. If you look at reward crowdfunding platforms like Indiegogo and Kickstarter, which many people at least assume equity crowdfunding was built to kind of mirror that, but for stock versus getting early access to a product or your name in the credits of a film. It's all about the pre-launch. And in Indiegogo and Kickstarter campaign, the stats say something like, if you don't hit a third of your goal in the first 24 hours, 80% chance you're not going to hit it. And that's the result of a good pre-launch. There were limitations in terms of what could be announced before the deal was live with Reg CF. Now you could do test the waters, following the guidelines. Many issuers don't take advantage of that, and whether you're doing any type of pre-launch marketing or not, just crucial that you're setting the right foundation in those early chapters so that you could build upon it. You're able to bring your first degree, second degree networks there. They're backing, and I'm using the word backing because even if they're investing at the minimum level, it still creates more momentum for the campaign. Maybe they're sharing to their audiences, a second degree network comes to play. It's that much easier to get a cold audience, somebody who doesn't know you, they've never met you in real life. As you said, they don't feel like they know you as a human or understand the company, the product necessarily. If they see that so many others are putting their money in, that social proof, that third party validation is there and it's present. What other recommendations would you have for a founder that's tuned in terms of what they should test? I look at marketing as a series of tests, but overall towards their growth, what should they be looking to incorporate into their capital raise?
Yeah. I think an important thing, and whether or not they test it or just that it's included, but it's the storytelling of that founder themselves. Why is this person working on this? And why, let's take a step back, right? Why is the team generally one of the things that's most cited as being like one of the most things that many investors will look for? Think of all the challenges that most startups run into, right? You're running a business that's tight on cash. You got to figure out how to hire people fast, deal with personnel while trying to build a product that's never been built before and continuing to raise. There's a lot of things that you need to manage and juggle, and a lot of things that can go wrong. And if the founder or the CEO or whoever the executive team is that's running it, if they're not here because this is something they want in their bones to exist in the world, there's going to be a lot of opportunities for them to say, you know what, this is really hard. I don't know if this is worth it, right? So you really got to make sure that the person, as an investor, I'm talking with my investor hat on now, right? Investing in a founder who has burned the ships. Like they are doing this because they believe in what they are doing. They are passionate about it. This is what they live and breathe 24/7. They're not just a mercenary, right? They're a missionary. They're here to change the world in whatever, kind of little segment that they're focusing on. And that's the type of person that will attract investors that will resonate with them. So if you're that founder, if you're that executive, telling your story that in a way that will resonate with investors and communicate that, I think is super, super important. Yes, in the end, looking at your revenues and your traction and your team and your execution, that's all important, but that's more table stakes, right? A lot of that is they don't want to find any red flags there. A lot of times what it comes down to is how well they can tell the story and get people excited. That's what this is about, right? You are bringing these investors along the journey with you. Yes, they're going to write a check. They hope to get a financial return. There may be some people out there who are just doing it purely for the financial reason, but I can probably bet that many of them are investing because they like you and they like what you're building, or they're excited to be a part of that journey with you. So take them along with you. Like that's one of the biggest things. Some of these campaigns, you feel it's just so roboticized, or that it's so bland in some ways, and they're not letting that come forward. So let that shine through. Like let that true you and what your company is and what you're building be apparent to the investors, because I think you will find that your audience of investors will much more easily find you once you do that.
Well said. I mentioned that sales is a transfer of energy. The founders selling stock, and if they're showing, hey, I live this, I breathe that, this is my passion, I'm hitting the goal, this is a moving ship and we're getting there one way or the other, this is your opportunity to get on board with us. And I love that breakdown, mercenary versus missionary. I haven't heard that before. I think that really goes a long way, whether it's in paid advertising and bringing in traffic, probably from cold audiences, or going to your networks, your social channels, all of your community and audience channels, which I highly recommend and is overlooked at times, and feels like a missing if you get to a deal that has $0 raised, $20,000 raised. You ask why. People they know may not be backing it. What about founders who are doing that, or running different marketing channels? They're just not seeing the performance yet. What would you say to them? How can they optimize? How can they pivot to be able to manage the campaign to a point of effectiveness? I'm sure you've seen deals that have been slow and then picked up later on, and a month in, 2 months in, it could be confronting. It could feel defeating of, maybe this just doesn't work for us. Maybe we need to do something offline, pitch a few larger investors. We've talked about the value of the crowd of retail. Uh, what approaches would you recommend in terms of optimization?
Yeah, great question. So, one of the things that would be important throughout, right? And whether you're doing well or whether you're kind of getting to that more plateau and trying to figure out how to get over a hump, you got to communicate as a founder and posting updates. And I think it's somewhat well understood, but a lot of investors will perhaps find your page the first time, right? Maybe you just launched a day ago or a week ago. They come across your page somehow, find some things that resonates with them. A lot of them are probably going to say, "Okay, I'm going to come back to this later," right? Like there
Hmm.
will not be a lot of some people, sure, will click the invest button, make the investment, with a quick overlook, but a lot of people need time to process it. And so I think once they start following you, it's important that you continue to show progress. So, okay, perhaps you haven't raised 100 grand over the past few weeks, but maybe you launched some new product that's really exciting or seeing really good traction. So, giving product updates, thinking about things where, let's say your campaign is interesting to me, at the current deal terms, maybe I haven't decided to invest yet. If you can make an announcement like you just had a new partnership announced or a new big B2B customer, that is now very enticing to me as someone who's following you because I was already interested in your current deal terms and traction. And you've just given me another data point now where it's like, wow, this is even a better value deal because they've added value to their revenue or to their subscriber base or whatever it is. So I would say continue to communicate progress in your product. Any announcements like that you can share is definitely something I think that would help to perhaps get more momentum. You did mention, this can also be a good tactic. If you get a big investor, someone write a $25,000 check or a $50,000 check, perhaps offline or perhaps as part of the raise, mention that because that's another big part of social proof, another part of validation for the investors who maybe were on the fence or maybe who are looking for some of that more, they want someone to vet this. And there's, yes, agencies out there like us, like KingsCrowd, who will rate and look at the different opportunities and tell you the good and the bad and the ugly. But also having bigger investors who are committing bigger amounts can be another sign of like, okay, this person actually did a lot of due diligence. They looked at it and they decided to invest 100K or something like that. That can be very meaningful for your audience to be able to get some of those people off the fence who are perhaps, haven't made the decision to invest yet.
We look to incorporate that into advertising and organic content. Hey, look at this thought leader and their testimonial on why they invested. At times it's in video format, and the movement as a whole is contagious. I like to say prospective investors are looking for that line around the block. And without that activity, it could feel like an empty restaurant.
Mm-hmm.
So if we see
Yep.
an issuer hit their milestone in a FINRA regulated portal, then do an email newsletter to their investors mentioning it. There'll be a spike of investments commonly to follow. An investor that's coming back with a retargeting advertisement, and it's their fourth or fifth visit. If every time they get back, there's more raised, more investor reviews that are very positive, it can do
Mm-hmm.
great things for the campaign. And lastly, what about scale? Any examples, any tips that you would provide listeners, viewers on how they can scale their round and be one of those top deals?
Yeah. From the marketing perspective, I'm sure you and your team have a lot of the good stuff. So I won't, reiterate probably a lot of the good things you've said in the past, but I would go back to one of the things I said of leveraging your investors in your community. So I've seen, once you have something that's working and maybe you've kind of gotten some investors, some good momentum, go through and read some of the reasons of why people are investing. What are they saying they're excited about? And then doubling down on some of those good reasons. Depending on the platform, people will be sharing in comments, or perhaps sometimes there's these shout out boards where they can say why they invested, why they're backing you. That's a data gold mine, right? Because you're getting the reasons from the mouths of the investors who invested in you, why they're investing, what they found compelling. And then take that and see, doubling down on it, or what could you do to take that and get it out there to more people like that person to be able to attract more of what's resonating already.
Mm-hmm.
In addition, I know it's not super scalable, but I do think there's something to getting more personable, um, I'll say it like making more of a personal connection with potential investors. So we've seen towards the end, right? Maybe you do an investor webinar where you can invite people to hop on and ask you a live Q&A, get to see you in action where it's not the polished, pitch video, it's not the behind the Q&A, but they actually get to see you face to face on a call. That can go a really long way, I think, especially to help close people who are maybe on the fence or who haven't made up their mind yet. So I would say, not that that's a very scalable thing to be able to do, but once you're at that scale, I think that can help to close some of those investors.
Absolutely. We'll see the largest attendance for webinars during those closing stages, and being able to invite prospects, being able to invite investors who may put more funds in and have
Yep.
a fear of missing out at a bigger level as
Right.
the company continues to grow. These are excellent recommendations. I feel your passion. I feel your commitment as you talk through all of this. And again, startups, growth stage companies, they can fail. They can be slow
Yep.
with a lack of capital. So making the access to investors more possible using these platforms. I know it's something that we're both a big fan of and champion for. Being able to share with investors how to evaluate deals, how to structure their portfolio, things to look at, and the numbers, things to look at outside of just what the numbers are saying, is something that you've been able to play an instrumental role of. And the industry should credit you for that growth. So this has really been a pleasure speaking with you, Brian. And I want to
Likewise.
thank you for taking the time to hop on here.
Thank you, Jason. Thanks for everything you do for the industry, and always happy to help provide. So if there's ever any feedback, feel free to shoot us an email. Let us know what we can do to help out. We're more than happy to help. So yeah, people can
Awesome.
check us out for
Yes.
if anyone hasn't already or not already aware of us, head over to kingscrowd.com. I think a lot of the stuff we actually talked about today is free on our website in a lot of places.
Hmm.
Some of the reports, like the market trends and everything's, are a paid feature, but you can look at our database of 9,000 companies and get the amount they raised, the valuation, the deal terms, the platform, all that, just completely free. We're really trying to help democratize the access to the data as well, so that people and the industry as a whole can help grow. So kingscrowd.com, feel free to check it out. We also have a weekly newsletter where we send out kind of a different chart of the week or data insight. So that's a free newsletter you can sign up for from our website, just in the footer, enter your email, and you can be on our list.
And highly recommend that you do, whether you're an entrepreneur, a founder, someone watching the industry. Definitely check out KingsCrowd. It's a light subscription cost, by the way. Not to plug KingsCrowd too hard. Like Brian said, a lot of it's available for free. I'll share the information on discovery calls with prospective clients, strategic partners, and they're always amazed to see the numbers and get their own education, even just some stats right there in a brief discussion. So definitely recommend you get on there today, whether you have been or whether it's the first time for you. Brian, thanks again for taking the time to do this. It's been awesome, and going to be cheering on KingsCrowd as the industry continues to grow here as well.
Fantastic. Thank you, Jason.
Thanks, Brian, and we'll see everybody next time. Thanks for tuning in. Take care.